Sources say composite licenses also likely to get the green light as the government hopes to amend the laws in the current winter session of the parliament.
A fresh new tariff threat from the president-elect Donald Trump in the US roils global markets. Trump pledges to impose an additional 10% tariff on China and a 25% tariff on close US allies, Canada and Mexico. Blames all three nations for not doing enough to stem the flow of drugs and illegal migrants into the US. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to get you up to date and ready for the next trading session. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. So how do you classify today's trading session? Quiet, flat, sideways?
Quiet, right?
Quiet, right?
Sideways, quiet. I mean, especially because Friday was up 2%, the Nifty was up 2%. Monday, the market was up.
But we woke up to like heavy news flow of Trump tariffs, etc., and the tweets.
And that's the thing, right? I think we should expect more of it. And he's just getting started. He's not even president yet. He's president-elect. So 20th of Jan when he takes over. Yeah. And he said, well, on day one, I'm going to do this. Yeah. So I think we should expect more. But just a quick, a couple of things as we look at the market and what happened today. So as I said, absolutely quiet. The levels, etc., don't move. The target, resistance, whatever you want to call it, is the 40-day exponential, which the market has failed to take out yesterday and today, 24,340. Today, of course, there was no question. Nifty bank resistance zone is 52,680, 52,817. Here again, I mean, we didn't come anywhere close to it. For both the Nifty and the Nifty bank, I mean, you know, the gap area that we saw, after the gap which was formed after the Maharashtra elections when we opened, I mean, I think that should come into play. But sectorally, a lot happened. I mean, you had at least 5 sectors which moved more than 1% up or down. Defense, IT, FMCG on the upside, auto, pharma, energy on the downside. As I said, I mean, it's essentially, it's quieter. It's going to be quieter in the US because of the Thanksgiving holiday and a half a day later this week. But that's only later towards the fag end of the week. But in any case, I mean, because it's holidays, generally trading activity in the US is going to be lower, smaller. But I think markets will be not on the edge, but generally, I mean, I think everyone is prepared that, as I said, as I began by saying, expect more from US President-elect Donald Trump in terms of tariffs and what his agenda is going to be when he takes over in the middle of January 2025. Rima.
So watch the tweet before the ticker. Well, on the Nifty, we closed below the 24,200 mark. Quiet, flat, just mildly down about 0.1% on the benchmark indices. But it's not bad. And the entire Adani Group stocks were under pressure. Remember, Moody's has changed the outlook on 7 Adani Group companies from stable to negative. So that weighed on the sentiment. We'll discuss all these in greater detail. Let's also tell you what we have for you on our show today. The top movers and shakers, Vivek is here with that list. A few defense stocks took the spotlight following JPMorgan's brokerage commentary. While Zomato shares also saw an uptick post its QIP launch. We'll get to that. And also, as we wrap up the show, the key market events to watch tomorrow. But as always, it's over to Vivek now for all the stock movers.
Well, good afternoon and thank you so much for that. First on our list of gainers today has to be the top Nifty gainer itself. Shriram Finance, yesterday also a very sharp up move today, very strong management commentary coming in. Stock up over 7% in just the last 2 trading sessions. The next stock, of course, has to be from the telecom pack idea. Very big relief coming in from the government. Opened up very, very strong, cooled off a little bit, but despite that, ended higher by almost 7.5 to 8%. Now, the entire pharma pack today was under pressure, but amongst the mid-cap space and some of the smaller pharma stocks, there was actually quite a bit of buying activity that went on throughout the trading session. So names like Emcure Pharma that saw upgrade coming in from Kotak, names like Biocon, Granules, Laurus, Glenmark, all of these stocks managed to end with pretty strong or significant gains. The other stock on the radar was Triveni Turbine. It ended up as the top gainer as far as the NSE 500 index was concerned. Volumes too quite strong. And Apollo Tyres, both in the F&O space as well as the broader markets, did see buying activity throughout the session. So Apollo Tyres was the one that ended higher by almost 3.5%. But on the other side, the entire auto pack today saw quite a bit of selling pressure. All of the auto stocks, in fact, ended with cuts. Bajaj Auto down almost 3%. Torrent Power within the broader end of the markets. And remember, the entire power pack has seen quite a bit of a sell-off from the recent highs. Power demand has come down. On the back of that, Torrent par, down today quite significantly. BSE, that was the other stock from the broad end of the markets. Yesterday, there was some support in terms of the stock entering the MSCI, but today down almost 6%. Remember, some of the clearing corp regulatory proposals will indicate that there will be some EPS cuts coming in as far as exchanges are concerned. And lastly, amongst the broader end of the market, this was mainly some of the stocks that did see some selling pressure.
All right, Vivek, thank you very much. That's a lowdown of what moved and where, up or down. Let's move across to Jay Bala of cashthechaos.com and Sudip Bandyopadhyay, Group Chairman, Inditrade Capital. They're with us now to take some questions. Jay, for viewers, just recap the view on the markets. You are, we have seen a decent rebound from the lows, but you're saying, well, it's a rebound waiting to be sold into.
That's right, Prashant. We had discussed this a few weeks back also on markets forward. I'd said the same thing. The markets are likely to bounce, but that bounce is likely to get sold. And this is looking like a counter-trend bounce. Although right now, the high that we saw yesterday, the high that doesn't seem sufficient for the counter-trend bounce to complete. I would like to see a shallow dip to about 23,800, 23,750, and then bounce back to fresh swing highs past Monday's high. So that I am anticipating that to be about 24,400 to 24,800, and then the selling to resume. And the banking index is behaving very choppily too. 52,475 was the resistance that projected. Today's high was about 3 points higher than that. And if that were to get exceeded, I think a maximum of 52,950. So and the price action of HDFC Bank is not encouraging. The only two banks that are strong for the banking sector is the HDFC, SBI. ICICI is middling. Rest of the banking space are quite weak. And so if HDFC were to collapse, it will put a lot of pressure on the banking index. And that's the reason why I've been saying sometime when the next leg begins, it will be the banking stocks which will be leading the way down.
Okay, thank you very much for that. Let's get to the defense stocks because that was the sector of the day. Brokerage firm JPMorgan has projected strong growth for India's defense production and exports. So they've initiated coverage in 3 stocks, BEL, HAL and Mazagon Dock Shipbuilders. Nimesh is here with the details.
Hi, Rimana. So all these stocks are buzzing in trade on the back of the JPMorgan note. On BEL, JPMorgan has a target price of 340. On HAL, they have a target price of 51.35. Suggesting potential upsides from current levels, meaningful upsides. And also they have a neutral rating on Mazagon Dock with a target price of 40 to 48. And now, as far as the sector is concerned, JPMorgan believes that the sector presents a very long runway of structural and value accretive growth due to multiple reasons. The first reason is very high and increasing capex. Now, they estimate $150 billion of capex over the next 5 years versus $85 billion in the previous 5 years. They also see a very large export opportunity. So they see a 46% CAGR for Indian companies in terms of growth over the next 7 years, and that could be quite meaningful. And also there is a huge opportunity of domestic manufacturing, focus on high ROCs as well as strong cash flows. Now, given that the stocks have pulled back very sharply from the recent highs, JPMorgan believes that it's a good entry point for these incumbents because they provide a good 15 to 17% EPS CAGR and an ROE between 23 to 33%. So on back of this, initiating report on 3 names with a very strong buy on both BEL as well as on Hindustan Aeronautics.
Sudip, Nimesh, thank you very much for that. Coming back to you for more. But any thoughts on these names? Any of the 3 names that Nimesh mentioned?
Well, Prashant, I've been positive on BEL for quite some time, and I believe defense electronics is one space which I think is going to get into a zone where it will continuously surprise us on the positive side. And they're talking about the export opportunity, and I strongly believe the opportunity is humongous in defense electronics. Also, remember the others like HAL is into aerospace. Mazagon Dock is into shipbuilding and other things. Whereas BEL, being in defense electronics, does serve Army, Air Force, and Navy. All 3 segments of the defense forces, whether it's India or other countries. So the opportunity for a BEL is going to be significantly higher, is what I believe. And it's been a very well managed company for a very long time. A strong balance sheet, strong performance on a continuous basis. From a long-term investor's point of view, acquiring BEL at current level is absolutely fine.
Okay, so BEL is your bet. Let's talk about Zomato. It launched a $1 billion QIP. One would assume the stock would come under pressure, but it instead closed up with a gain of 2.5%. Nimesh, explain what happened.
A reminder, the stock ended higher largely because I understand there was a very strong demand in the QIP of $1 billion. In fact, the feedback is that the demand was close to 3 times the base book. So that's the reason why you've seen a big reaction on that stock. Well, the floor price was quite low, almost a 7.5% discount. But looks like the QIP placement will happen at a higher price. So that's the news part. Now, what is the implication of this? One, after this QIP, the sense is that the FI holding will fall below 50%. That's going to be quite critical for the e-com business. Now, what I understand from sources, we had broken the story a month back as well, and even then we had said that after the QIP issue, once the FI holding falls below 50%, the company is expected to write to RBI and cap the FI limit at 49%. That's going to be quite critical. However, that will have an impact on the MSCI as well. So Jefferies had written a note when we broke the story a month back, and they said that if this becomes a domestic company, which is going to be positive for e-com, there will be an implication of the stock getting exited from the MSCI. So that's something to track for Zomato. Additionally, while the QIP is done, I also understand there's going to be a large block very soon where a strategic investor could see a clean out trade. So even that would mean that the FI holding falls below 50%. So that's the near-term trigger for Zomato. The QIP done, they've got the $1 billion. I think now the next thing would be one, the clean out rate from the strategic investor, and the fact that they'll look at capping the FI holding at 49%.
It's a question I think we've discussed. Nimesh, thank you very much for that. There's Swiggy, there's Zomato, there's Zepto, which has done a fundraise. There's Amazon Tez, which is going to be sort of launched soon. So quick commerce, I think 2024, one of the big stories, of course, has been the rise of quick commerce as a viable, very much here to stay kind of business model. Jay, Swiggy, of course, there's not very much history, but Zomato, chartically, how's this one looking?
Yeah, if you look at the price structure of Zomato from the September highs and to present, the decline from 297 to 240 is also overlapping. The rise from 240 to 280 now, that is also overlapping. So this can happen only if markets are actually finishing a topping pattern. So I would expect Zomato to cross the 297 high registered in September, but that will be the final high for the stock in this leg of the move. But the medium to long term is actually quite positive for the stock. But it needs a good deep correction to somewhere close to about 170. That will make it quite bullish. Maybe even shallower correction should be about 200. So 200 to 170 will be a good correction for the medium term. And the stock looks bullish for the medium and long term, but short term it's looking toppish.
Short term toppish, good over the medium term, long term. Let's get to the other big story. The Insurance Amendment Bill is expected to be introduced in the upcoming winter session of the Parliament. What does this bill bring about, and why is it an important reform in India's insurance sector, perhaps the boldest ever? Yash is here with the details.
Well, Rima, you said the boldest reform in the history of insurance sector, and indeed promises to be one of those. As far as the Insurance Amendment Bill is concerned, there are 5 important aspects which this bill, if approved, brings to the sector. The first one is composite insurance license. A lot being spoken about composite insurance license. Essentially, it allows insurers to make a cross entry into each other's segments. What does that mean? If this indeed gets approved, then life insurance companies will be allowed to sell health insurance policies or any other segment of general insurance like motor insurance. Also, on the other side, health insurance companies and general insurance companies can also underwrite and sell life insurance policies. What does this do? It increases the competitive intensity in the sector as more players look to enter each other's space. The second one is as far as the distribution of other financial products is concerned. Right now, of course, insurance companies have their distributors to sell their products, but once this gets approved, insurance companies will also be allowed to sell other financial products like mutual funds, bank FDs, loans, credit cards, so on and so forth. The third one is initial capital needed. The proposal is to reduce the initial capital which is required to start an insurance business. Currently, entities have to bring a minimum capital of 100 crore to start insurance business and 200 crore for reinsurance business. That is proposed to be reduced and not have one fixed number, but that number of initial capital will depend on the size of the business which the company intends to take. The next one is captive insurance licenses. Now, this is one very interesting concept which could come with this particular bill. This means that conglomerates, large business groups could be allowed to start their own insurance entities, their services being limited to their own employees. So that will be one very interesting amendment. The last one is relaxation of investment regulations. Currently, of course, there are limits to how much an insurance company can invest either in equity markets, government securities or private debt. With this particular approval, the ball could move into the regulator, that is IRDAI's court, to essentially give approval to an insurance company to invest more in either equities or debt or on the private debt if they want to do so on a case-to-case basis.
But yes, the FDI bit is separate, right? I mean, that's a different thing, but that will also get done, is what we understand.
So
the 100%, moving up to 100%.
Correct. That's what our colleague Sapna has reported. The 100% FDI proposal is out of the insurance amendment bill, but it is a separate aspect which the government is considering. Raising the FDI limit in the insurance sector from 74% to 100% remains to be seen whether it's through automatic route or a case-by-case approval route.
All right. Well, lots of changes coming as we wrap up this year and head into 2025. Yash, thank you for that. Sudip, any thoughts here?
Well, I think, Prashant, is a very interesting kind of bunch of developments. Insurance industry needs expansion significantly. There is no two ways about it. And IRT has been talking about it for quite some time. And they've been mentioning that it needs significant amount of incremental capital to be invested in the industry. And for that, I think one of the measures they want to take is allow 100% FDI. The other measure, which I think will increase competition and efficiency, is allowing cross selling of products by life insurance companies of general insurance and general insurance companies of life insurance. I think that's also a very good development. I'm not so sure about the the distribution of mutual fund, bank deposit, loans, etc., how that will pan out. But other two developments, one is 100% FDI and allowing life insurance companies to sell general insurance and general insurance companies to sell life insurance products, definitely will increase efficiency and increase penetration as far as the insurance industry is concerned.
Okay, all right. Well, banks sell insurance products, but that is under a bit of a cloud, as we've been reporting. Why not insurance do the same for banking products, right? I mean, I don't know if that's the logic. But thank you very much, Sudip and Jai. Great speaking to both of you. And it's a pleasure having you here on CNBC TV 18. We'll take a quick commercial break here. We'll come back with D Street Chatter with Nimesh. And we'll also tell you the events to watch out for as we come back tomorrow. Stay with us.
Welcome back. You're watching Markets Forward. It's time now for our segment D Street Chatter. Nimesh is here to get us all the insight. Nimesh.
Hi, Rima. Extremely range-bound day of trade, but there is a lot of action in the broader market names and a lot of stocks are buzzing as well. So the first stock on my list is Connex Micro, a small company, but that's been buzzing off late, thinly traded as well. But the big buzz is that the company is likely to bag a large order very soon. So that's the trigger for Connex Micro. The second name is BEL. We highlighted the JPMorgan note, but additionally, I understand there is very strong buying from larger FIs in BEL today. The third name is Muthoot Micro. Again, a small company, but buzzing in the last couple of days. The volumes on the higher side. And after a very long time, some bit of FI interest seems to be back in that particular name. And the last is Akum Drugs. That stock's seen a big derating in the last couple of months. There was a massive selling which is going on. I understand the selling pressure from that private equity fund is largely over. And after a long time, some bit of buying interest seems to be back from larger FIs in Akum Drugs as well in today's market.
All right. Busy season for Nimesh is starting now once again after the earnings season is over, right, Nimesh? Lots of fundraise, deals, QIPs. So we'll keep you abreast with all of that. Well, let's get you the key corporate commentary that we had over the course of the day here on CNBC TV 18. The Microfinance Industry Network, which is an SRO, self-regulatory body, has announced a slew of changes to tighten lending norms. The CEO and director, Alok Misra, told us that portfolio risk is somewhere between 3 to 3.5%, and the focus is in returning to better discipline. Efforts are being made to strengthen the loan utilization checking practices. He added that they are hopeful the sector issues will be settled by January of 25.
Shriram Finance Management says for FY25, the company is forecasting an AUM growth of 17 to 18%. They expect net interest margins to remain stable at 8.7%. They also anticipate double-digit growth in the gold loan portfolio, supported by the addition of more branches. They added that they will maintain cost below 2%, following a 1.8% print in the prior year.
Okay, in the infrastructure space, Afcon's Infra was with us in the morning, and the management said that there has been a lull in ordering activity due to the Maharashtra elections, but they're expecting ordering activity to resume in full force soon. The company has already secured 2 major road projects from the government here, and several bids are still pending with results which are awaited eagerly.
Okay, and before we wrap, we'll bring you some of the key market events to watch out for. Mangalam is here. Mangalam.
Well, the stock that we'll be watching out for tomorrow will be M&M, because tonight post-markets you will have the launch of the electric SUVs BE6E and XEV9E. The pricing of that, etc., would be in focus. The other one that we'll be watching out for is NTPC Green Energy as well. Lists tomorrow. Apart from that, there is an MK FinShift Global Investors Conference where both Zaggle and Fino Payments will be presenting. So any details coming out of that would be crucial to track. And post that, we'll have a bunch of macro data to watch out for, namely from Wall Street. We have initial jobless claims for the US. We have the Q3 GDP, core PCE coming in, along with the November meeting FOMC minutes. So all those factors would be crucial.
All right, Mangalam, thank you very much for that. Well, with that, it's a wrap here on this edition of Markets Forward. Programming continues with more news and updates on the other side. Thanks for staying with us.